President Trump recently proposed the idea of a 50-year mortgage. Joining us to discuss is public policy analyst and economist Michael Bustler, a professor of finance at Stockton University. So, Michael, good to see you, as always. Can we get your thoughts on whether this will make home ownership more affordable by extending the loan period to lower monthly mortgage payments?
So the answer is this 50-year mortgage is a good idea and a bad idea. It's a bad idea if someone is purchasing a house that they tend to live in for a long period of time. Most people, they buy a starter house. Typically, you move up one more time. It's usually the third house that becomes what we call your forever house. So if you take out a 50-year mortgage on your forever house, one you're going to be in for a number of years, the amount of interest you're going to pay goes up by hundreds of thousands of dollars, depending on how much you paid for the house and the interest rate. So from that aspect, it's a bad idea. It's a good idea for somebody looking for a starter house that says, look, I'm only going to stay here 3, 4, 5, 6 years until the value of the house goes up. I build up some equity, and then I'll move into a larger house. From that aspect, it will help a lot of people. So how much will it help? I just ran some numbers quickly. So if you're taking out a $400,000 mortgage today, and the median home price, I think, is over $400,000. So $400,000 makes sense. If you're taking out a $400,000 mortgage, and let's say it's at 5.5%, mortgage rates are a little higher than that now, but they're coming down. 400,000, 5.5%. If you take out a 20-year mortgage, which is what I recommend if you could afford it, the monthly payment would be $2,750, 20-year mortgage. 30-year mortgage, it would drop to $22,270, almost a $500 decrease. A 50-year mortgage, it drops down to $1,960. So for somebody looking for their first house that's having trouble with the monthly payments, taking out a 50-year mortgage will help them to get into their first house. At some point, they buy a starter house, you stay in it for a number of years, and then you move on. At that point, I would recommend a shorter term. And when you get into your forever house, if you can get down to a 20-year mortgage and afford the monthly payments, I think that's the best bet. So this will help first-time home buyers get into houses.
So, Michael, would you say that if this helps first-time buyers, right, by the third house, your forever home, as you call it, by then, would you say that these home buyers would have enough equity built up to be able to afford something like a 20-year mortgage?
So two things happen. One, you'll have equity built up, so your down payment on your next house will be larger, so the amount of mortgage will be smaller. And also, 5, 6, 8 years down the road, your income should be much higher than it is when you're looking at your first starter house. So it'll help the people getting started, let people get on their feet, let them build up in their careers, get higher incomes, and then when they move on, look to take a shorter term mortgage.
Would you say this would have any impact on banks or mortgage backers like Freddie Mac, a 50-year mortgage?
Well, assuming, I don't know if any legislation has to happen. I don't think so. For this. Now, Fannie Mae and Freddie Mac, they're sort of quasi-public agencies. They may have to go through some legislation. But from the bank standpoint, they are taking a little more risk in that with the 50-year mortgages, you make your monthly payments, 99% of the payment that you make is interest. So you're doing very little to reduce the equity. So from that standpoint, a $500,000 house, years down the road, you're still going to owe pretty much what the total value of the mortgage is. So it's a little riskier for the banks. What that means is they're likely to charge a quarter of a point, perhaps even a half a point higher. But still, the monthly payment will now fit into people's budgets, where a 30-year, or typically 25 and 30 are what's mostly used, a 25 or 30-year mortgage, they wouldn't qualify. Their income isn't large enough to carry that monthly payment. A 50-year mortgage, their income may be sufficient to carry that payment and at least gets them into a house. The thing with real estate and owning homes is real estate virtually always goes up in value, typically a couple of percent more than the inflation rate. Now, it varies over time, but typically that's what happens. So if you own a home and you're building up equity, you're going to look at something in the future, it'll be a little more money, but you'll have a larger down payment and you'll be able to qualify for a more expensive home. The 50-year mortgage is meant to be for starter homes so people can get into houses. There's other ways we have to work on to get the cost of housing down. That's true. But at least on the mortgage end, this will help somewhat.
So you said that the value of a house virtually always goes up given enough time. So I'm wondering then, for those who are on a 50-year mortgage, would there be any impact to them in the event of a period of a downturn in the housing market?
Well, if you own a home and there's a downturn, there's always an impact. If you think back to 2008 when we had the financial crisis, what the federal government did is they wanted to improve the home ownership rate from the traditional roughly 62% of households up to 70% of households. Now, to do that, they had to come up with very creative mortgages. They had these variable rate mortgages where the teaser rate, the first year was relatively low, and then the payment would go up. But what happened was home values declined. And since people had bought these houses with little down payment, the value of the house ended up being below what the mortgage amount is. And when that happened, people just said, well, there's no sense me paying any more into this. And they just stopped paying. And there was so many that went into foreclosure, it may take a year or two for the banks to catch up to everyone. So there is more of a risk to banks. And if there is a downturn, the risk to the banks will be greater because in the early years, you're paying down very little of the principal. It's not an ideal situation, but it will help people get into their first house.
So, Michael, what do you think is at the root of the issue where homes are becoming more and more unaffordable, so much so that we're talking about 50-year mortgages?
So a few things. Number one, land costs to get a building lot has gone up significantly. Now, the Trump administration has talked about releasing some federal lands to private developers at very low prices to keep the land costs down, and that's should be a big help. Secondly, the techniques we use to build houses are pretty much the same thing we've been doing for the last 50 or 100 years. They're what they call post and beam construction, and we have to start to come up with more efficient ways to do that. Now, the market is responding. They have now modular houses, which are built to the same specifications as on-site houses. However, they're built in a factory, shipped out on a truck, and lifted on a crane into place, and then the houses are finished. On average, that has lowered the construction cost by about 10%. It's also reduced the financing cost because you don't need a construction loan for 9 months or a year. These things can be set and finished in 3 or 4 months. So we need better techniques. And with all the technology and all the AI and all the automation we have today, we're going to have to come up with better ways to build houses to reduce the construction costs. Material costs continue to go up. Labor costs continue to go up. So we're going to have to figure out how to be more efficient with both the materials and the labor to get the manufacturing, the building costs of the house down. If we can get the land costs down, we can now start getting home prices down. One other thing I'll mention is the size of houses has increased significantly, probably in the last 20 or 30 years. The average new home today is about 2,200 square feet. That's a fairly large house. Starter homes are typically in the 12 to 1,500 square foot range. But Going forward, again, to keep the costs down, if we make the houses a little bit smaller and have more efficient layouts and room utilization, that'll help to keep the costs down also.
Michael, just one final question. And you just talked about how the private sector can help make housing more affordable. What do you think are some ways that the federal government could do to make buying a home more affordable?
Well, as I said, giving land to builders is at a lower rate, a lower cost is one way to do it. The government likes to support research into new techniques. So if they start supporting some of that research into new techniques to do things, we'll come up with better ways to build the houses to make them more efficient. Now we've in the last 40 or 50 years, we've worked on making houses more energy efficient. So not only would it be less to build the house, but you have to look at the monthly expense, not just the mortgage, but there's the property taxes and there's the heating cost, electric cost, et cetera. If we can make the homes more efficient so it uses less utilities to reach the same goals, we'll be able to keep the cost down. Property taxes, I live in New Jersey. Property taxes here are ridiculous. We have to do something, and that's really done at a local level, but we have to do something to get those property taxes down. Now, one thing Congress and President Trump did when they passed the 2017 tax cuts is they said, look, state and local taxes, which used to be deductible on your income tax, will no longer be deductible. The thought was that people in communities, when they hear, well, their taxes are going up a little bit, they say, well, so what? It's tax deductible. It's not going to affect me that much. The idea was we're not going to have the taxpayers subsidize that anymore. And when they raise your taxes, it's coming out of your pocket. The hope was that that would make people more interested in working with their local communities to try to get those property taxes down also.
Well, all right, Michael. Great hearing your insight. As always, thank you very much for talking with us.
Thank you, Don. My pleasure to be here.